Good morning. For the first session is a special session on early stage investments. At this time, I'd like to welcome Mr. Harish Narsappa, partner Narsappa, Dorswamy and Raja on stage, please. He'll be our session chair. He's also joined by Mr. Bharat Banka, member Indian Angel Network, Mr. Satish Andhra, MD Venture East, and Mr. Sunil Goyal, CEO Earnest Angel Fund. Can we have all on stage, please? Harish Narsappa is a partner at Narsappa, Dorswamy and Raja, a leading corporate Bangalore-based law firm. Harish has extensive experience in advising cross-border mergers and acquisitions, banking, corporate financing, private equity projects, regulatory and dispute resolution matters. Bharat Banka, CEO Aditya Birla Private Equity and member Indian Angel Network, mentors entrepreneurs as an active member of the Indian Angel Network, the largest network of angel investors in India. Bharat also heads Aditya Birla Private Equity as its founding CEO. Satish Andhra is the managing partner, Tenet Venture East Fund, overseeing investments across technology, which is mobility, cloud, internet, and technology-enabled solutions, including education, healthcare, and financial services. Sunil Goyal, the CEO and fund manager of Earnest Angel Fund, has led angel investments and focuses on building early-stage businesses. SKG is an active member at the Indian Angel Network, Mumbai Angels, and a member of the TIE. Over to you, Harish.
Thank you. Good morning, everybody. I think the organizers have a very good sense of humor, if nothing else, because early stage and we are very early in the morning, and I think that's reflected in the audience as well. But I suppose they have to start with, and Arun, it's a compliment, so don't take it otherwise. I think we have to start with early stage at an event like this. So what we will do is I'll request each of the three speakers to give a brief talk about their views on early stage investments, what has happened over the last 12 months, the trends they see over the next 12 months. After that, we'll have a Q&A and a brief panel discussion. So first, I'll request Satish to say a few words.
Sure. So good morning. My name is Satish, and I run an early stage fund called Venture East Tenet Fund. What I'll do is I'll just share my perspectives. I came back to India in 2007 along with DFJ. DFJ was a large global venture capital fund. 6 months ago, I left DFJ to join Venture East. And the reason why I'm talking about 2007, 2005-06, I kind of call that as the second innings of the venture capital. And a lot of activity on the venture capital side. And mostly, we saw incubators, academic incubators in IITs and IIMs and ISBs. And then as venture capital funds, we would occasionally go and invest in early stage companies. Sometimes go find a deal within an incubator that's interesting, and then sometimes because we knew entrepreneurs or executives in an operating role before who left their earlier job to start a company, we would go invest early stage. But last 5 years or 6 years, things have changed significantly. And if you look at, there's a lot of activity and excitement in the early stage landscape. From kind of incubators and VCs. Today, you have very, very active incubators with small funds, small sidecar funds. IIM Ahmedabad as a fund, ISB, IIT, Mumbai. Many of them do have a small fund. Not only they would give space and they would also, just give you some grant, but they could also invest. A couple of our deals, we have these institutions investing like investors. So that's one significant change. Also, they've opened up now not just to alumni and graduating students. I think they're open to working with early stage entrepreneurs. It's not anymore, closed box. Then we saw very active formation of angel networks. Indian Angel Network and Mumbai Angels were the first ones to kind of take off. And now we have vibrant angel networks almost in every city I helped jumpstart Hyderabad Angels in Hyderabad. Then we have Bangalore and Pune and even Cochin, that was recently announced. So a lot of these angel networks are very active, either successful entrepreneurs, executives from operating companies, or high net worth individuals and family businesses. They're all the members, and even bureaucrats, retired bureaucrats in some of these angel networks. They're helping entrepreneurs. Then the third component of early stage ecosystem, we've seen accelerators. A lot is written about Y Combinator, Techstars, and a whole bunch of these in US. And now in India, you have a lot of these accelerators. Morpheus, I think, was the first one. Now you have Hatch, Angel Prime, Venture Nursery, many, many more. GSF that Rajesh Sahani runs. And then, the special category within the early stage ecosystem, outside of incubators and accelerators and angel networks, are dedicated seed funds. Seed fund was there. Even previously, they were kind of the only operator. Apex'13 also raised a fund, Erasmic, which later became Axel. These were the funds in the 2006-07 kind of a vintage. Now we have seen many more new funds, Bloom, and then Your Nest, and even a couple of more. Recently, Unitas Seed raised a $25 million fund to invest in social ventures. So overall, I think very, very early stage focused, a lot of players, a lot of activity. Even corporates like Microsoft and IBM have Citrix. They do have accelerator programs, mostly technology-based. So that's the overview of early stage landscape. So that leaves entrepreneurs with a question, and they're always puzzled, who should I go to, right? There's so many of these avenues, should I go to an angel network, or should I go to an incubator, or should I go to an accelerator? At least a couple of tips that I can share. Companies that require longer gestation periods, require decent amount of due diligence from an entrepreneur point of view, I think should go to incubators. I'd put clean tech and healthcare and medical devices kind of companies. They do take long, time. So they're better off in being incubators and kind of completing their due diligence, building out the plan. Often it's just that one person who starts with an idea, and incubators are great places for them to go bring in the founding team. Any very, very fast-moving business idea, and if it's tech entrepreneurs, they need other expertise, I think should go to accelerators. I think the thing that worries me most about in India is accelerators are also being all things to all people, and that model is not going to work. You couldn't be bringing in a retail company, a fairly consumer services focused retail company into an accelerator. You can't accelerate anything. What accelerators do is put people on fast track. They're not the mentoring and education places. I think that message is getting very much mixed up in India. Whatever you see in Y Combinator or Techstars, these are companies that scale very, very, very fast within 6 months, or they shut the shop and go away. So these aren't businesses that get opened up and then work for 2 years to figure out what they want to do. So I would say internet, mobility, cloud, they're good candidates for accelerators. When it comes to super angels and angel networks, I think very domain-specific businesses, and if there's a good relationship with one of the angels and then the entrepreneur is fairly seasoned, they already know what they want to do, I think angel networks are a very good bet. Seed funds, I think most of our investments, I've already given a couple of term sheets. I was just sharing with some friends in the audience that these are conceptual businesses. These are just a couple of team members, no revenue. They have some pilots going on, but as a full-fledged team, they know the domain, so we're willing to bet up to $1 million on those kinds of concepts. So that's, now a little bit about Apex'13 fund. The first fund is around 60 crores in size. I'm going to raise the next fund around 200 crores. We have a couple of institutions like Google and Lemelson, mostly US LPs, who have supported the fund. And most of our investments have been either in IIT Madras or IIT Bombay incubated companies. But now we're open to all kinds of good ideas. And many of our portfolio companies have gone and raised follow-on rounds after we've made investment.
Okay, thanks, Satish. I'll now ask Sunil to say a few words.
Thanks, Harish. Yearnest Angel Fund is just 9 months old. We launched our fund in March last year. But this was after seeing and watching one entrepreneur, Sunil Bharti Mittal, build a business on vision and right set of people and right talent. I worked with Bharti Airtel and closely with Sunil Mittal for 10 years. And that seeded the soul that if he can do it, why not? Thousands of other people in India can come and do it. This has actually, if I relate to what Satish said, there's a third wave of venture capital that is now starting in India. The first wave was when state-sponsored Gujarat State, ICICI, etc., started the venture capital in India. The second stage was when the foreign money started coming in 2000 and 2005, 2000 with the foreign VCs, and 2005 or so with the local managers coming in. In now, 2011 saw local domestic venture capital funds coming in for the first time. And this is the thing, that's a capital which is going to stay for long. But it's going to be a tough journey to educate all of us to put in our savings into an high-risk asset class like early-stage venture capital. The good thing is the market is growing. What we've watched, last year we saw around 240 deals happening, either in angel or early-stage VC. Early-stage VC for us is anybody who's investing less than $20 million in a less than 5 years old company. And what is it showing is that less than 2 million transactions are multiplying. 2/3 of the VC transactions were less than 2 million, and all the angel transactions were less than $2 million. The market is, in my terms, booming because this kind of activity was never seen. Angel activity has doubled in last 2 years. VCs may have doubled over a period of last 4 to 5 years, but less than 2 million is growing much faster. It is now, money is now available to IT and ITS sector much easier and much faster. Why so? There is an IT talent, there is a technology talent. It is a asset-light business models that are coming by. It is coming up with something which is very innovative, and people are moving from services to products being created around those IT technologies. The moment we start seeing this kind of activity, it is supplemented by, in just, if I'm 9 months old in 2012, UNS received 870 proposals for us to look at. We engaged with around 120 of them. In-depth means that we crossed the second level of evaluation. We could invest only in 3. Look at the kind of entrepreneurs who are coming up and seeking money. India needs lots and lots of more capital. $500 million that came into VC or angel investing last year is just not sufficient with the kind of entrepreneurship we are seeing. If we profile the entrepreneurs that are coming in, around 80% of them were MBAs or MBA engineers or engineers. And of them, we saw 40% were IIT or IIMs, only 2 institutions that we are talking names out. People are choosing entrepreneurship by choice now. If that is happening, and I can't tell you how much of, we are 3 partners, me, Sanjay, and Girish. When we meet entrepreneurs or listen to your stories, we just keep on wondering why the hell this idea did not come to us. They are such ideas, they are trying to compete with the best in the world. Do they have the wherewithal to be able to make it to the next level? Yes, from within them they have. Is the capital sufficient for us to support? I would say not yet. There's lots of capital required. There are accelerators and incubators and early stage VCs which have now come into action. But what action? Only 25 VCs or so, or this thing, have made a deal a quarter. Means every quarter one deal is not more than 25 VCs for such a large country and such a large population. How do you reach out to them? Means how do you reach out to just 25 and then thousands of entrepreneurs coming into being? It is a healthy trend from the supply side. Supply will always bring more demand. We believe people like you, some of you who will make their millions of dollars of earnings will someday start investing beyond real estate, fixed income, or gold into an asset class like alternate asset class. The moment that happens, when somebody known to you start investing in alternate investment class, we will be creating productive jobs through early stage. We take pride that we've just invested in 3 companies, and within 9 months, we have 140 employees in these 3 companies. So productive jobs will come in through this early stage investing only. At Yearnest, we normally invest 2, 3, 4 crores in the first round. We are ready to go up to 9, 10 crores in the subsequent rounds in a company. It's a 100 crore approved, SEBI-approved venture capital fund. We 3 partners have the only capability who understand how to run operations and how to build businesses or how to build teams. That we are not technology guys per se, or we are not investment bankers. We only understand as to how to put a business together and take it forward. That brings that our time is available to our portfolio companies. For us, they are like our prodigies. They are our best friends, the ones who we invest in, and enable them to build their businesses. Thank you.
Thanks, Sunil. I think there are a couple of points there which I'll come back to you when we
Sure.
Start discussing on certain questions. I'll now go to Bharat. Bharat, can I request you to take off from where Satish and Sunil stopped?
Thanks, Harish. Actually, just when I was hearing Satish and Sunil, there are some striking similarities and some differences, because Satish has been a career, I think, venture capitalist.
Yeah.
Sunil, I think, on the first level of his career is more like me, where we have built businesses, large businesses, and created value for our sponsors. And that's where the sort of similarity ends, because then he has turned an entrepreneur and started Yearnest. And I've been still running a private equity, I think, which I founded about 4 to 5 years back. So my actually experience, I think, in alternate asset investing or on the early stage investing has come through more, I think, understanding of this space, much more interacting with, likes of Satish and other people. And earliest association was with Indian Angel Network when its formative years. They started to decide a Bombay chapter. And I became part of that about 4 years back. And it was very fascinating because, it is radically a different space compared to, the late stage investing that you do, or even the large businesses that you handle. So I would sort of just share some of those experiences at 2 platforms that I have been part of. One is Indian Angel Network, and the second one, as just Satish said, that an accelerator that we just started last year. I've been a founding charter angel out of that in Venture Nursery. And again, between those 2, I think the experiences have been radically different. So at Indian Angel Network, typically IAN is a India's largest and the only national sort of network of angels. Over a period, I think the membership has built up to more than 220 members. So that gives cross-functional and cross-border kind of experiences. So there are global members, there are domestic members, and these are people who have built businesses. So that gave us an insight into, when we meet entrepreneurs, what are the different kind of inputs and what are the different kind of value addition that one could do. In terms of the sheer quantum, I think I'll just take off from where Sunil left. So typically, I think at IAN platform, I think in the first stage, you would get at the secretariat level more than something like 2,000, 2,500 proposals a year. Now that gets funneled to 1/3, which gets shown to at least one of the 5 chapters of IAN. So we have sort of 5 chapters across 5 cities, Bombay, Delhi, Bangalore, Pune, and Hyderabad. And out of those 1/3, typically I think 1 out of 100 will get picked up. So despite that, the largest number of investments in last, since inception of IAN, I think we made 36 investments. And the pace has started picking up because the entrepreneurship actually has been growing. The number of proposals have been growing. That shows the quantum of entrepreneurship within the country. 2012 calendar itself, we almost landed up with closing something like 11 to 12 deals, which is almost a deal a month. And it also helped that the kind of members that got added, which were very active investors, that gives us a lot of more confidence into looking at different kind of areas, different businesses and all. Next point was that, typically I think people say that it's easier to sort of invest as an angel, but, it is difficult to exit, and which sort of stops, the rolling of the stone. In case of Ion, I think we've been able to successfully exit 5 investments in last 2 years' time, and at a hefty multiples. So some of the investments have given 4 times multiples, some 11 times. So that gives, again, reconfidence to the entire segment. Not only for Ion, but for the angel investors. When they listen in general as a particular, that one is that you are backing your passion, and the same amount of capital, when you sort of multiply that, you can put multiple fold of that money in the system. So it's as much sort of for the entrepreneurs to sort of provide us with successful businesses, which sort of gives more confidence to the angels itself, because all said and done, it is still a fledgling kind of an industry. It's in nascent stage. It has a history in India of less than about 10 years' time.
Yeah.
So that's, I think, one experience that I shared here. In Venture Nursery, again, it has a vintage of less than 1.5 years now. And in the first boot camp that we started, we received something like 150 proposals. After we shortlisted, I think, 2, and we invested in 1. And in the second boot camp, I think we had almost 250 proposals. We have shortlisted 4, and we are yet to decide on whether we'll invest in any one of them. So I think the message for all of you is, who are sort of looking at entrepreneurship, is, the funnel is very, very, very steep. So, out of 2,000 proposals, I think eventually some 12 get funding in a year, at an Ion platform. In Venture Nursery, it gets, out of 250, I think maybe 4 get selected and 1 or 2 get funding at an accelerator stage. So, this just corroborates, I think, what Satish and Sunil have said, that the quality of ideas, the level of conviction of the entrepreneurs, and their commitment. I think these are the few things which are very important when we look at an entrepreneur who's coming to us and seeking funding. In addition, I think at the business level, I think there are these 3 or 4 principles which all of us actually don't tire actually repeating again and again. First point is, have you identified what's the pain point? Now, is it a good to have kind of a thing for your customer, or it's a must have? And that itself, I think, is at many times is a stopping point for us. That if it, again, a good to have kind of a product or a service, it's a me too, in our minds. So differentiation is pretty low. The second thing would be is how scalable is the idea. So, in say, take an simple example of restaurant. Someone might be wanting to do it for a passion, but he might just stop at 1 or 2. That doesn't find funding. So something has to be scalable, and the next one, it has to be having a timeline for profitability, because that is what is going to get you the next round of funding. So these are few basic, I think, business disciplines that across, whether you are approaching an accelerator or an incubator or an angel or a VC, or even at a later stage for a private equity. Yeah. These are few things, and I think last bit is, I think, one question that we get asked for is, what are the kind of industries or what are the kind of verticals, where entrepreneurship is happening. To us, I think it is happening across. However, in last few years and coming year, I think personally I see a lot of action and interest happening in the space of internet, in the space of cloud, in the space of education and healthcare delivery, to my mind. And I'm cutting across, I think, the stages of accelerator to venture funding, including some of the interesting businesses like consumption and retailing, as Satish just said, that it may have to come at a different stage of funding. But as a sector and as a vertical, I think that's a very interesting space. And one thing I think I would still take a bet, because India has not seen a very successful software product launched. Now, I would hope.
I have one of those already,
sure,
which is absolutely.
So I would feel and hope and sort of that in next 2 years' time, we should at least see a software product company out of the portfolios of some of us, which could become a big blockbuster, and that could establish and propel many more software products coming.
Right.
So that's what I had to say, Harish.
Okay. I think we have a few points for discussion. What I will do is I'll take questions from the audience, and then depending on time, I'll also include some of the points that I want to ask the panelists to give their views on. So questions, anybody? Yes. Yeah. I think Vikas, right? Yeah.
The last 3 years, the investments have really not been, less than 300 in all the last 3-4 years. If you compare to US, it's like 100 times. Yeah, I know Sunil's face, so that's the same old story. But the funds, the lot of funds which have got established, there's funds in the system, right? So why are we not having like 500,000 investments a year? Why is it still in very, from my perspective, very small numbers?
The amount of it is not about the quality or high quality deals available. What happens is if the capital is limited amongst, I mean, his is a 60 crore fund, mine is going to be a 100 crore fund. There are other funds that you look at, Bloom is 100 crores, K Capital is 150 crores. If you just put them together, the size that is required for India has to be far bigger, even for early stage. Angel networks, there are only 600 angels or so between all these angel networks, whatever you talk about. It is a supply side problem. It is not the creativity of the people. And that is what is bringing the international funds to come to India. And even the larger funds are allocating more and more money to the early stage. We never had so many late stage funds allocating chunks or being prepared to look at even concept stage businesses or a business plan stage businesses being funded. They've done it. Even companies like Matrix, which only does $10 million or so, has an early stage arm now. So it is the opportunity which is large. The part is capital, one. Second, I would say it is growing very rapidly. If something is growing at the 20-25% in numbers or so, it's a decent growth. Yes, we want to see 100% growth in this particular sector. Will that come in 2013? Looks tough.
Okay.
So a couple of, I would like to add to that. One of the biggest issues is exits, even in early stage, not private equity, but even in early stage. If you look at US and again, Silicon Valley kind of dwarfs every other region, even New York, Boston, and Seattle. $25 billion of venture capital last year, and then $25 billion of angel investments last year.
Correct.
Right? So no doubt, India is in a very nascent stage. Google alone acquired $2 billion worth of companies. Just one company, the way Cisco triggered acquisitions in 2000, between 96 and 2002, Google is that acquisition machine. A good team, but a failed execution. Good idea, good team, failed execution is a huge exit. I'm talking about GoWala, which is in the location services space. Right? You have Foursquare, which is a winner, but GoWala was acquired by Facebook. In Indian context, it's very, very, very difficult to get exits. Most of the US exits are by strategics. In India, majority of our angel exits have been through VCs and PEs who come in at a later stage. So clearly, some of these companies have to go to the next level and get to the finish line, which is called the life cycle, right? So we get money from LPs or high net worth individuals or foundations. You have to deploy that money has to, companies have to grow and exit, and the money has to go back to LPs, and these are called cycles, and those haven't happened yet, in an Indian context. And then the second thing is, yes, there's a lot of money sitting on the sidelines. And I just feel for any firm, there is this, thumb rule, right? If you couldn't create one winner in 10 investments, you cannot create a winner even in 1,000 investments. Yeah. 10 is big enough sample size. And a lot of funds are already out there who have made 10 plus investments. So they're waiting for those winners before they make additional bets. So these are a couple of reasons why, some of the money is sitting on the sidelines. Just on a lighter note, Bharat, I started 2 companies before I moved to the venture capital side, but both in US. Yeah. So.
Okay. I have a couple of follow-up questions. Maybe I can ask Bharat to react. Do you think one of the reasons that more money is not going into early stage ventures is due to the other risks in the environment, the business environment in India?
Yeah, so I'll actually pick up, a couple of points. Harish, you made a good point. One is, Sunil, I think, mentioned about supply side, not being a problem, in terms of supply of deals. What actually I have noticed, and because, as again Satish, as I said, I'm coming from a different background. I see that, there is very moderate level of respect of capital. Respect for capital, I think, that entrepreneurs receive. most of the times, I think the engagement when you have with entrepreneurs, I think in a 20-minute conversation that you will have with them, in the 4th minute, I think you'll say, so how much money are you going to be providing us? The question is that, all these setups that you are seeing, which is accelerator or incubator or VC or angel investing, it's not only about capital. So whether for intellectual capital that you derive from these kind of platforms or for financial capital that you derive from this platform, I at least have a feeling that the entrepreneurs who receive this capital, they don't respect it fully. And that's what actually also makes as a general community, I think, for people to sort of come and not take a full step forward, despite having cash on the back of, commitments that they have. The second one, as you just mentioned, is about the overall environment. So yes, that's true. While it's very dichotomical that at the very macro level, if you see, to encourage entrepreneurship, Ministry of Finance and lots of people are taking a large number of initiatives. There is even a committee, so far as I'm aware, under Raghuram Rajan, which is looking at, I think, giving a very impetus to this entire entrepreneurship by creating a framework for angel investing and all, and some of us have been contributing to that through our inputs. So while at the macro level, I think this thought is right in the right space and a lot of things is being done, grounds up, what we feel, while we engage with lots of entrepreneurs at an early stage, is that, say something like, a company which is just about a starting up, if they have to look at service tax and, excise and all those kind of stuff, it's pretty hard for them, right? So initial 6 months, I have seen lots of accelerators and all that struggling with just putting those systems up. Now, these are very different than, what you would see in Silicon Valley kind of companies. So these are the grounds up kind of, regulations, which, if it can be improved, then obviously that will help a lot. These are also inputs that have gone into, some of these setups that we have.
Yeah, we are constantly as industry taking up with the ministries number of such issues which are not allowing an entrepreneur to work and service the customer or develop on technology or build on that particular phase, rather than being bothered by, what happens? The first thing that you do after incorporating a company, make a payment to Google or a Facebook or an Amazon through your credit card. You become an offender the day one. Yeah. You're supposed to, as per current law, even if you put $50 into any of these things, you're supposed to be complying with the reverse service charge mechanism of service tax, or you have to pay income tax on behalf of Google or Facebook or Amazon to the government the next month. Now, these are simple stuffs which are, there's such number of these issues which makes us 173rd country in terms of ease of starting up a business. We are talking to them, but that stumbling block is from one end of the thing. The second end of the economy is obviously there's enough capital in India, enough capital. There are, even with the recorded number of people who are millionaires or surplus, investable surplus is 160,000. And the large number of millionaires in the country. But why aren't they looking at creating productive jobs?
Okay, that's it. I think we will stop there. I'll come back to you on the exits and the surrounding environment, but we'll take one more question before we focus on exits. The lady there. Yeah, you. Yes, yes.
Space, clearly because of lack of funds. What do you all see as the future of e-commerce in India? And my second question is, should we be focusing on Indianized models like Redbus rather than, going for global kind of models?
Okay, we will take one more question, I think. No, sorry, I spotted him first. Yes.
Thank you. My name is Nitin. I come from Imris. My question is more on the location specific. As you've been talking that most of these angel networks are in the tier 1 cities. But there are a lot of ideas and people in the tier 2 cities also who don't enjoy the benefit of these incubators, accelerators, and they are in the requirement of these funds. So how, first of all, from your perspective, tier 2, is it something on your focus? Second, how do these people from tier 2 cities access to such of the networks like yours?
Okay. Bharat, do you want to go with the Indianized models question first?
No, of course. So, I think at Angel Networks, to my mind, it's very interesting that you asked that question because, as I said, in my limited experience of 4 years, I have seen 70 or 80% of the proposals that come are internet or e-commerce based. So, why physical boundaries, I think, have to be there even to approach an Angel Network. I think we have very vibrant websites and, again, I think almost 40%, I think the plans that we receive are received through, our sites. And after that, if we like it, then obviously I think the geographical boundaries are not a barrier. And I don't think that entrepreneurship is confined to a few cities, except that as I just mentioned that this industry is in infancy to an extent, and the vintage is less than 5 or 6 years. So it is expanding. I think if you look at Indian Angel Network, I think in short span of 5 years' time, they are across 5 cities. And maybe the bias is towards Pune, Hyderabad, and Bangalore because these are more tech cities that way. So I don't see that as a limitation to my mind.
There?
I kind of agree with Bharat. I think that may be the case 10 years ago, but today with LinkedIn and websites and a lot of forums, I think access is ubiquitous to everyone. And I think one of the things I do at ISB, part-time is this entrepreneurship discovery. I think the first thing I tell people is just make sure, you want to be an entrepreneur. And there's nothing wrong in not being an entrepreneur. It's very important for them to discover. And I feel that entrepreneurs easily can find ways to get to investors in today's time and age. If they don't, then it's their problem. It's not investors' problem, honestly.
And actually, I have to just supplement that. We have looked at proposals from cities like Calcutta, from Chandigarh, Haryana, from even MP, from Indore, Bhopal. So you name it. I think there are cities, from Kochi, from Trichy.
This is not the problem. Tier 2, etc., is not the barrier in mind. We want to look for the best entrepreneur, best guy who can help us fulfill his dreams and our dreams of making money.
Yeah, so forums not having chapters at respective cities is not a limiting factor.
Yeah, it's not a limiting factor.
Definitely not. Okay, I think regarding e-commerce, I can, so if you look at e-commerce globally, including Japan, China, US, 20-odd e-commerce companies, they're surviving, took more than $100 million, and they're all trading at less than 1x of their GMV. Right? Amazon is the leader, and if you dig deeper into Amazon financials, there are 3 things in Amazon: the retail business, and then fulfillment by Amazon and Amazon Cloud, right? Amazon Web Services. The other 2 businesses are far more profitable than their core business, which is e-commerce. And they're doing $50 billion of revenue. I think India is a wonderful, wonderful opportunity for e-commerce companies, no doubt, because it's one of the fastest growing markets. But only few of them will survive. They'll burn at least $50 to $100 million before they get there. And at best, there could be, a leader in each of the categories. So there's going to be a lot of consolidation that's going to happen. And it's just a function of time. So I think funds who have deep pockets and who can take a 5 to 6 year view or even longer, I think should bet on e-commerce. For very early stage, I think if you can get in and get out quickly, that's a great opportunity. But I don't know, if we will, come across those opportunities now.
Okay. Yeah, you had a question.
Let me add on
sorry.
the e-commerce part of it. We have not done our duty on our end on one aspect. The Department of Commerce does not allow foreign money to be invested in e-commerce companies. It's so sad that capital from within India is not there. And when a business needs close to $50 to $100 million to reach a reasonable size, where will it come in from? Today, all the B2C models cannot attract foreign money. And if somebody has been able to attract, there are other ifs and buts that are created around it. Will the money continue to flow in? Be cautious. Around 15% of the deals that we get today also are either e-commerce in retail or in services. The government internally is confused whether e-commerce in services, booking ticket, etc., is e-commerce or not. They don't even know the definition within, whether to allow or not allow the foreign money to come into that particular sector. So this is one area which consolidation will happen. Yes, that's the need of the hour, but we have to work on to the government side as well.
I think I want to ask a question there, because I think you mentioned the structural challenges in e-commerce whenever foreign money is coming in. Now, that kind of uncertainty in ensuring revenue flow, is that a serious concern for investors?
Oh, yes. There's definitely a serious concern. It makes the things difficult for them to operate and execute.
So that goes back to what Bharat was saying about grounds up.
No, that's true, because this again, I think the problem out here is, Harish, I think you'll know from your background. It's actually, there's a bit of a fuzzy, I think, understanding between the Finance Ministry and Reserve Bank of India. So even in some of the e-commerce issues that Sunil just mentioned, I think they're the ventures in e-commerce who have already received funding.
Yeah.
Now there is a thinking about it when there's a B2C model, whether this is retail, and hence whether they should or should not, and if it gets ping-ponged between the two. So they'll say that RBI, if it clears, we are fine. RBI says that if Ministry clears, we are still not fine. So this is, I think, some basic clarity, and it's just a stroke of pen. That's all.
Yeah, but I think it's good for people like me. We write a lot of memos on that, but you're absolutely right. I think that's something. The regulatory uncertainty about certain hot industries, I think, needs to be cleared, and that's
so what I should just tell you is that I am on executive committee of this India Venture Capital Association. This issue we have discussed there, and we plan to take it up before the budget. So,
that's
but that's with the hope.
Yeah. So I think dealing with the government will take a long time anyway. So I think we should wait and watch this space. Okay, let's take a few more questions.
Good morning, everyone. I again have another question of e-commerce. So like all of you have mentioned over here that the funnel is limited and you have lots of queries coming in related to e-commerce. So from an angel investment criteria, what are the shortlisting criteria that you would put an niche e-commerce brand to the next level of talks? And also from our front, we are a niche e-commerce brand in apparels, and we have our own manufacturing support system. And we are in the early stage, making few lakhs of revenue a month, growing at the rate of 30-35% a month. So how would you position such a scenario in the angel investment scenario over here? Thank you.
Okay. We'll take one more question. Anybody else? Okay, I think we're fine. So who wants to take that question first? It's a very specific question. Yeah. So
no, I've stayed away, from e-commerce, but I've looked at adjacencies of e-commerce, kind of selling shovels to people who are digging gold, right? I think if you are going to, go after a particular category, I think just make sure that it can be part of someone else's catalog eventually, right? Once you get to a certain stage, that's a niche, that kind of fills someone else's catalog. The big challenge is a lot of people come and say, I can do private label, and private label has huge margins. It just takes a lot of time and a lot of money to create private labels. Everybody brings and talks about Zappos or Wankel or, but it's just very difficult. So I think for you, one is, if you can get to cash flow positive on your own, and if you can show that solid financial model, that there's demand and you have the right catalog and you know how to produce and deliver, and then kind of really stay cash flow positive, maybe there are some people who are interested in writing checks. Otherwise, if what you are doing fits very well into someone else's catalog, I think there are a bunch of big players, who want to acquire good companies with nice niches. My focus has been, in terms of things like recommendation engines, because they have to happen. When you have a very large catalog, unless you have personalized recommendations, it becomes very, very difficult, to go search and buy what you want. Or reviews and ratings, unless you have the editorial content, just not the manufacturer content, and the user-generated content around catalogs. It's very difficult for consumers to make those decisions. So I'm more looking at these adjacencies as opposed to core e-commerce.
Yeah. Sunil, I saw you shaking your head.
No, very good points. This is the right thing. Just keep in mind that customer acquisition costs in e-commerce building your brand to attract the customers onto your website is an extremely costly affair. It is, with that particular cost being high, the best way is to be part of somebody's catalog over a period of time, but have an engine ready, have something, have the supply side ready to be able to ride on somebody's brand around. Yeah.
So the idea is to promote our own e-commerce in the long run. So like.
I wouldn't do
I think,
that. I wouldn't do that.
I won't.
Okay,
Yeah,
okay.
I would just go focus on them and get many of them and develop widgets
Okay.
which go on to many more websites and
Okay.
just focus on.
So consolidation is certain.
I think we'll
Yeah,
stop there because you know you can chat to them separately because we have a larger audience. I had a question before we go to the audience, and you know I should probably ask Bharat because he also runs a PE fund and he is part of Indian Angels Network. A lot of private equity guys complain about becoming angels because they say there's a lot of emotional quotient involved. That the early stage investor needs to spend a lot more time with the entrepreneur, mentoring him and getting involved in issues that are not really business related. And I think as Indians, we're all very emotional people compared to maybe the Western countries. Now, do you find that difference in the two hats that you wear?
Of course, I think, I find a lot of difference because, I think at a late stage investing, usually I think you would refrain from investing in an emotional entrepreneur, right? Other than emotion for his own business. So, that we call passion. But other than that, I think if he is a very emotional guy, then we treated that, that's typically I think in PE investing, at least I think we put almost 2/3 weightage on the promoter, on the entrepreneur. And if he is emotional, as you said, and I have to sort of offer him shoulder, every now and then, it's not a very nice situation, for large amount of dollars that you are betting on. Now, so if you slip to sort of the early stage investing, you do understand, that lots of time I think the entrepreneur, he has betted his life, and his all savings, I think, on that kind of a thing. And he is sort of just grooming himself up, to become an entrepreneur. He needs a lot more help. So at that point in time, I think, you just become not only an investor or a mentor, I think you almost become a sounding board. So for the person to sort of even at sometimes, I think you would say that, personally, the guy would say that there are a lot of family pressures to say that you leave this and, you go and pick up a job. And that's the time that dispassionately you should be able to relate to that, emotion and give him a relevant advice. And even if at sometimes I think it is going against your investment, if that's the right thing for the guy to do, I think that's what earns you respect as a mentor or as an angel investor. So I think between the two hats that I wear, I think these are radically different learning spaces.
Okay. Satish, have you advised people to give up their entrepreneurship and move on to other areas and more secure jobs?
I have done that and I continue to do that. And the reason is, I think, sure, commitment and passion are very important, but opportunity cost is also very important. If you are at something for too long and it's not taking off for whatsoever reason, I mean, you have to give up and move on. And that's a must. And for an entrepreneur, right, it's 1 out of 1. It's just that one venture they're working on. And for an investor, it's a portfolio game. We all know that 2 out of your 10 investments, that one super investment returns your entire fund. Many funds, have done analysis, it's just 2 or 3 companies that return the entire fund. So investors, mostly venture capitalists, I'm not talking so much on the private equity side, don't have experience. VCs are paid to find winners, not to salvage losers. So very clearly they'll start looking for new ones. And their time and attention would not go to these companies that are struggling. And if the market forces change, you're not able to raise capital, you need capital, you've been at it for longer, you realize that it's a vitamin, not a painkiller, you need to be bold enough to say that, look, this is not working out and I need to move on. And there's nothing wrong in doing that.
Okay. Sunil, do you want to add anything?
This is usual. You come across so many business plans and within few minutes or so, you're able to judge that this is not going to work. The best way is to tell that person that it's not the money that you're going to put in. Do evaluate for yourself. Opportunity cost is the best way. Many times we come across a business being chased by 5 people or 4 people or 6 people. That's ridiculous. Means the opportunity cost is multiplied. If it is 1, 2, 3 people, it's a right opportunity cost. And then since we have some experience in the industry, means for example, we can very clearly say you don't have enough money to do e-commerce on your own brand. It's going to be a wild goose chase. So if you can find an alternative thing, continue with the business. Otherwise, it's better to pack it up and cut your losses.
So I'll just add one thing, this is, I think, at the time when you select a venture, or, at the time when you're running it.
Yeah.
I think it's equally important when you're looking at an exit. Yeah. And exits don't happen in a planned way. So assuming that you have supported a venture for a few years, and then sometimes you might call it as a curse of your experience, but you would say that as an experienced guy, you would say, this doesn't look like that this guy is going to be able to shape it, scale it up from here on. Yeah. And you would probably advise him to say that at this point in time, either you sell out or you merge. Right? That's the best option for you. At that point in time, again, I think the openness and the flexibility of the entrepreneur is very, very important. And probably in his own or her own, I think, analysis, one should do a 2x2 matrix. That if he was to sell or to continue, and if things work well or things don't work well, what is his assessment under the 4 boxes? And what is his downside, assuming that if he has sold out or if he has merged? Because many times, I think, you would have done, and that's a good thing, that in a few years, I think you have done well. And at that point in time, if you have not gone to a right platform or you're not sold out, who can manage your business better, then probably all the good work done, you will undo that in the next few years' time. So it's equally important, I think, next, and this loops back to the emotion point of view also.
No, Harish, one correction. Entrepreneurs who come to pitch to me, I don't tell them to not pursue that idea.
Absolutely.
Because entrepreneurs are smarter than venture capitalists.
Yeah, they are.
And they prove you wrong, and they change the world, right? I mean, last November, I had chance opportunity to meet with Ron Conway, and saying, Ron, you have Midas touch. Ron was saying, yeah, 4 of my 620 investments. I said, still, I'll take those 4 out of 620. This is an angel investor in Facebook. And so he was saying that when Mark came and pitched to him, he wanted to listen from Mark a number that if he can get 60 million subscribers on Facebook, he was going to write a check. Mm-hmm. And Mark came in and said 240, right? Ron said, this guy is smoking. I don't think he'll ever get 240, and he ended up getting $1 billion. So the point is, a lot of entrepreneurs, I think, are smarter, and they will change the world. But if it's not good for me, I tell them why it's not good for me, and I'm not able to invest. And they should go pursue other options. I'm more talking about a company that I've already invested in, and I'm working with an entrepreneur for 4 or 5 years.
That's what I meant.
And if it's not going anywhere, then it's very, very important to have that candid conversation. You can't be living dead. That doesn't work.
Great. Let's see if we have a few more questions. Then we can. Okay. Yeah, the man in the white shirt. Yeah. Okay. Okay.
Good morning. Sorry, I missed the session first half hour. So my question is, if your business is more innovation driven, so we are doing something called shopping services, like Satish was explaining just now, doing a recommendation how to do shopping better. So the problem with this idea, in a way, is we are trying to change the consumer behavior, and there is some nervousness in the investment world when they talk to us. This is the first time you guys are doing, and there is no data point before. What would be your advice to entrepreneurs who are pursuing such innovation-driven, but there are no history to, not exact history, there are many similar ones, but none the exact one for investors to come in and confidently. So any inputs would really help.
Okay, we got the question. I think there's one more hand up there. I think we'll take that as well. Yeah, please. That's the last question because I'm told we are running out of time.
Good morning. I just want to understand, how do you look at e-books, education sector, and the e-commerce business? How would you foresee the business?
Satish, do you want to take the first question? What about?
I think we can. You can take that offline.
Okay.
You know.
Fine. So, e-commerce, education, books.
I have no opinion on that one. But yeah, the first one, let me just highlight. Whenever we as venture capital make investments, the people that we invest behind are doing that thing for the first time. It is an innovative product. It is about doing something new and different. We cannot latch on to something which has been done earlier as VCs normally, and particularly early stage VCs. Hence, that's not the thing that will stall you from going ahead. What we see in you is that how much of conviction you have to that idea. Have you been listening to your consumer and picking on that big opportunity and spotting that big opportunity? Are you able to sell that big opportunity to us, and how you have seen that big opportunity? We have to have the same vision as you have. You have given up your everything to start that. Can you enroll us to be part of your journey by selling that vision and making us feel, yes, this is going to be the next big thing happening? If that happens, we are in. Any one of us will be in. So please keep thinking innovatively and doing different things and for the first time. Then only you will get our attention.
Bharat, do you have anything to?
Yeah, I think just I'll add on the education that someone asked that. My feeling is that the entire space of education is getting democratized. In the way I think 30 years back we would have gone through. And the net I think becomes very important as a delivery module for that. Now, what succeeds, what doesn't succeed, I think it is for us to guess, and that's what makes it so interesting to understand. But to my mind, I think delivery models in education, I think a lot of things will evolve. Additionally, I think on the vocational education, I think because India will have a lot of population, I think, which needs employment, I think, going forward. And if we continue at the GDP rate that we are, then a lot more jobs will need to get created, and vocational training, I think, will become very important. And everything of that might not happen in bricks and mortar. So again, in a democratization process, net will play a big role in terms of that. Models, I think, all of us,
Sure.
Let's let the jury take a call on that.
Yeah.
Okay, I think we'll end with. I have one question for all of you. I mean, very often, people ask, why is India not being able to produce a Facebook or a Google? And will we produce somebody like that of that scale soon? From say within a span of 5 years or 10 years, that huge scale. So, yes or no, or when do you think it will happen, and then we can stop? Yeah.
I don't think it has to, if someone like a Zuckerberg has done it, it might have been as well an Indian sitting in Silicon Valley done it. So, I don't get perturbed by the fact that a Facebook has not, or a platform like Facebook has not got created by an Indian sitting in India. It can get done anywhere, it can happen anytime, and any of the models can succeed. The question only is that in India, I think one limiting factor is that today penetration of net itself, on how many people are using it. Sunil, I think, would laugh at that point, that again the bandwidth that you have, with that how many people can you support, and can you sort of see streaming videos, streaming data at that speed. So that itself as a base, I think once that improves, then more users I think will come on board. That probably will help you, I think, drive that.
Sunil?
Well, he's touched a very touchy topic. It is about, all e-commerce businesses would have been prospering today, provided the telecom infrastructure would have offered bandwidth. Today, 300 to 400 to 500 million users would have been using bandwidth or internet in India. But the 2008, whatever has happened, the telecom has gone back, it's not invested enough capital, the kind of bandwidth speeds that we required to penetrate deep into the Indian economy has just not happened. Otherwise, the investment that went in 1.5, 2 years ago into e-commerce today would have been prospering much faster and much better. That's the first point. Yes, we are seeing the Indians part of it. We looked at one data of technology companies. 1/3 of the technology companies which became successful had an Indian person as a founder or a CEO or a president of that particular startup. That's an amazing fact. It is about, we are the people who are doing it, provided the right environment is there, and that environment is getting created. We have mentors, we have supporters, we have people who can now put in money. If 600 angels are there, they'll multiply soon. So the opportunity is going to be there. So we are very hopeful of that.
Okay.
So my perspective is a little different. I think it's extremely hard to raise money for product companies in India. It is. Especially companies that are focused on innovation. I've been working with 2 entrepreneurs who have 42 patents between them, postdoctoral, one in Silicon Valley, one in India, trying to find a syndicate partner. I have not been successful, right, to go invest. But it's a binary investment. I mean, you get a 1 or 0. Very, very clear, right? So I think a lot of these companies, we hear about them when they become really successful, but we never understand how much money and how much of hard work has gone in. You look at Workday, started by Dave Duffield and Anil Bhusri, is giving Oracle and SAP a run for the money. It's all ERP on cloud. 5 years ago, they came in and now, they're threatening, the large ERP players. In Indian context, if someone comes up with such an idea and they require $20 million, nobody is willing to write those checks. One can create a product and it costs a lot more to market and sell that product. And we haven't seen people writing big checks to do that. I think the day that happens, and for that to happen, we need to have case studies. I think like Bharat mentioned, when you see some winners, the Indian product story still is iFlex. For the last 10, 15 years, it has been iFlex, right? So you need to see many, many more. And that's my big focus. I am betting on a bunch of those. So.
Okay. Thank you very much. I think we are supposed to wait here for some presentations, I'm told. So I think
Thanks. Thanks, investors and panelists, for extremely interesting perspective. Thanks, Harish, for anchoring this session. I'd request you to remain on stage as we get started with our startup showcase.